Welcome to Forex Basic Class Series 1.0 by Top Forex Academy. Today, we want to look at a topic that is of great interest to many people. A lot of people have asked in the comment section questions that pertains to their interest, and they want to know the trading style that best fits their personality. So today, we'll be deciphering it for you as our followers are interested in trading in the best way that suits them. From the beginning of this series and this very video, we would want you to follow through so that you can be able to pick the tips that will be given you in the course of this video, which will help you to really understand the type of trading style that suits your personality. Please come with us and let's ride it together. Here, we'll cover different trading styles and how to choose the one that is right for you. There are several trading styles to choose from, each with its own unique approach and level of risk. Here are some of the most popular trading styles in Forex trading. The first one we are going to look at today is day trading. Day trading involves opening and closing positions within the same day. This style of trading requires a level of focus and attention as positions are opened and held for only a few minutes or hours. You can see the multi-time frame analysis for day trading, also known as top-down analysis for day trading, starts from H4, H1, and M30, or you want to take something lighter and go H1, M30, and M15. All right, so let's quickly explain how to apply this top-down analysis for day trading. Most of the time, you want to use the bigger time frame, which is the H4 here, to understand the order flow and the trend of the market. Then after that, after determining the trend, you move to the next lighter one, which is H1. From this H1, you can be able to confirm the trend if the trend of the bigger one, H4, aligns with the trend of the lighter one, which is H1. And after that, you will now be able to look at your area of interest on the H1, you roll it out, and then you begin to refine it and move further to M30, where you can look at your refinement and then determine if the market is actually doing some reversal and showing you dojis, hammers, and candles that is signaling the fact that the market would continue in that trend. So let's assume that the trend is a bullish trend. So you are expecting that after a retracement, that the trend patterns should give you at least one or two hammers on the bottom side, and this would signal a reversal of the retracement or a continuation of the overall trend, which is the bullish. You expect this hammer around the area of interest, all right? And when you see such a thing, you want to enter such trade, and then you come back to this H1, which is the middle one, to actually decide your stop loss and your take profit. So you use this to enter your trade. You determine your stop loss, I come again, and your take profit, while the lightest one is used for refinement. So this is basically a very strong top-down analysis. But if you want a lighter one, then you go for the H1, M30, and then M15 for your day trade. So people on the lighter one, they want to really take trades within 15, 30 minutes, while people on the heavier top-down analysis want to take a full day trade, or they want to take a 4 hours trade or 8 hours trade. Okay, so now we'll move to the next trading style that might interest you, and that is swing trade. Now, swing trade involves holding positions for several days to several weeks. This style of trading requires less time and attention than day trade and can be a good option for those with busy schedules. You can see the multi-level time frame here. That's the top-down analysis of the swing trade. You can see that a swing trader wants to first of all start its analysis from the daily time frame to check the order flow and also to see the trend the market is trying to depict. So then the next one is H4, where the trader is trying to actually pick his area of interest and underlining it and identifying his stop loss and his take profit, while he use H1 as refinements to seek for confirmation of his trade before entering. So we'll now move to the next trade, which is position trading. Position traders we now move to the next trade, which is position trading. Position trading involves holding positions for several weeks to several months. This style of trading requires a long-term view of the markets and is very suitable for those that want to take advantage of a long-term trends like Bitcoin. When Bitcoin was actually on $23,000 mark, people like Bitcoin, when Bitcoin was actually on $23,000 mark, position traders were able to spot the hammers that was coming on that mark, and they were looking at taking a long-term trade for a bullish trend. And those that actually entered those trades, and if they are still holding it now for several months, was this very price was hit around last year. That was 2024. So if you are still holding that trade from 2024, several months into 2025, then you are a position trader and you could have raked in a lot of pips, thousands of pips to your advantage. Such traders really take advantage of long-term trends for several reasons. Either they don't have time to keep checking every short movement of the market, or they have perhaps for now, so they are trusting to invest for a long term to see how much they can actually make from the market. So the multi-level time frame analysis, which is also their own top-down analysis that they use, could be monthly time frame, weekly time frame, and then daily time frame. All right. Or for lighter ones, they want to use a weekly time frame, daily time frame, and a 4-hourly time frame. So I would like to talk about this lighter one here. If you are taking a weekly time frame, you use that to check the trend and the order flow. Then you use D1 also to confirm the trend and also to mark your area of interest. And then when you do that, that's where you also find your entry and your stop loss and your take profit. You use H4 to do your refinements and to be sure that the market is giving you reversal signals to confirm your trading position is right before you go in. So I believe that with this type of trading, you are really comfortable if it goes with your personality and your timing and your funding, your capital. You know that this is what you are going in for, and you are not perturbed with any kind of small movement the market is doing. Perhaps you are in a temporary loss. You just know that you have a large stop loss that can carry your account, and then you are trusting that the market will overswing back to where you are expecting, and then the position you are taking is the actual overall long-term trend of the market. The next style of trading that I want us to look at is scalping. Now, scalping involves opening and closing positions within few seconds or minutes to capture small profits, small market movements, and small steps in the markets, small pips. This style of trades requires a high level of skill and experience, and then that's why it's not recommended for beginners. Okay, so you find out that many people that are beginners, they just enter the forex market and start scalping, and you ask them, what are you doing? They say they are scalping and they are beginners. So you see that that's a very wrong thing to do. So people that have been asking in our community, most of you want to know if scalping is good for you. So I will tell you today, if you are a beginner, you're just starting your trading journey, you should run away from scalping. Let's leave scalping for the professionals, for those that have been there for 1 year, 2 years, 3 years, 5 years, 10 years. Let them scalp. All right. While you should go for something that is fitting for you. So I recommend that you look at day trading or intraday trading, or you want to stretch a little with some knowledge, you can do swing trades, which could be also convenient for you with your timing. So let's come back to scalping and let's see how those that are not beginners, those that are professionals, they are veteran in Forex, how they do their scalping trade. Let us look at their top-down analysis and how they take opportunities in the market. So here is their biggest time frame. This is M30, which they use to understand the trend and the order flow. And then they use M15 to confirm the trend, to see that the trend aligns. And after that, they use the M15 to mark their area of interest and also identify their stop loss and take profit. They use M5, which is the smallest time frame for them in their own top-down analysis, to actually refine the trade before they go into the trade. So like I said, you don't want to do this if you're just beginning, because we want to teach you in Top Forex Academy to be very profitable and to be consistent, to make your trading sustainable and enjoyable for you. Now, we have actually seen the types of trading style that are there for you to choose from. So if you are a beginner, you know you want to use, it's recommended that you should use intraday or day trading, or you go for swing trading. So if you have been there like intermediate, you can still do some swing trading, which is very good for intermediate. And if you are really a veteran, you're very good, you can do position trading, or you don't want to take your phone, you don't want to allow your phone to stay long term and you're a professional, you can actually do scalping to take advantage of small movement in the market to get your profit. So let's quickly look at an example of how to apply the top-down analysis for the swing trade. I've treated an entire trading style that we can use. So we want to look at the swing trade, and then we see that the swing trade multi-level analysis or top-down analysis is D1, H4, and H1. So the D1 is for you to do your first analysis to understand the trend and the order flow of the market. So now I'm going to come to D1, that's daily time frame. So let me drag this. I'm doing this analysis on trading view. So this is D1. And then you can see that the overall trend here is bearish because the market is trying to do something that we are trying to understand. And then you see that after making a all-time high here, there is no other all-time high and the market has been going down. So this market is bearish. So since we see that the market is bearish up to this place, then we'll begin to look for, assuming that we are on these dates, we'll begin to look for a sell opportunity around here. And how do we clarify that? We'll now go to the lower time frame to D1, which is H4, to verify the trend, if the trend aligns. This is H4. All right, so on H4, around the place we are spotted, they have already put this Fibonacci just for us to have a view of what is going on there. Or you might want to put a line there. So let's go back to the D1. You might just want to put a line around there. So let me remove this Fibonacci. Okay, that's already removed. So now we'll now rule to identify that spot. So we have this. You can see that after this I, what we now have is there's no other high after this I. So I'll just pick this common place as my area of interest. Okay. Then I now move to the H4 time frame, which is this. Okay. So you can see the line I ruled. So I'll begin to look at my entry and my stop loss. Okay. So when I look at this, these are my entry and these are my stop loss. And then my take profit will be the down of the last one, which is what? This is my take profit. You can see that Bitcoin got to that point, okay, before bouncing back. And then what you now want to do next is that you want to refine this entry. You now move to H1. Remember, the top analysis for swing is D1, H4, and H1. So we are moving to the third one now, which is what? H1. So on the H1, you go back to the line that you have already ruled, and then you now be looking at the systematic rejection that is coming up there. You can see this. You can see systematic rejection. You can see this is the doji that we are talking about. So this is a doji, or it also looks like a shooting star, because after this bullish candle comes the shooting star, and then comes a red candle. Although this red is not pronounced, but you can see another one here. All right, so an evening star. All right, so, or an inverted hammer. So when you see something like this is signaling that there's a rejection to the uptrend, and then your sell position might hold. You can see it happened again, that the market keep going down and then comes back again to reject. And then what do you have? So when you see something like this is your confirmation. You can just enter this market here, or you set a sell limit here, expecting the market to do what? To pick it. Okay, so when you have this happen, you set the rejection, you set your sell limit, and then the market picks it here, and then you start having what? Profits. And if you miss this opportunity to enter here, there is this opportunity again for your sell order to be picked. So you see what we are talking about, and then you keep having your profits locked in. So I hope you understand how to apply top-down analysis right now for swing trades. So you can apply the same analysis to other trades like intraday or day trading, and also position trading. And also, if you think that you are up to the task to scalp, this top-down analysis can also be applied to scalping. The only difference with all this analysis is style of trading is that you have different time frame for each style of trading. And also, you also consider your pockets. If your account balance or your trading capital is sufficient for the type of trading that you want, because of course, you know that if you are doing swing, you might need to open up more pips for stop loss. And if you are doing position trading, you leave much more pips for stop loss, so that you can be able to contain the market movements up or down. Now, let's know that when choosing a trading style, it's important to consider your personal preference, time constraint, and risk tolerance. It is also important to have a solid understanding of the fundamental and the technical analysis techniques used in choosing trading style. So if you're actually a scalper, you want to quickly look at what the news is saying. The news is in favor, and you want to quickly jump in and then catch something and get out. If you're actually a position trader, you're not interested in the news, you're not interested in the data. All you want is you want to look at the technical analysis, and then you want to look at a long-term data that would actually work in your favor overall in the next few months or years. So if you are a swing trader, you also want to look at some data to corroborate your entry points. You want to also look at how much you are willing to lose in the market. For scalpers, it is almost very difficult to predict and to get correctly all the small market moves every time. So that is why we are saying that if you are not a veteran and you're not really, if scalping is not your thing, it's rather better for you to calm down and then look into something that fits into your thing, and then consider profitability, consider risk tolerance, what you can afford to lose and gain in the market. Who says that Forex is not profitable? If you know your trading style, then you don't have anything to worry about. So now remember that there is no one size fits all trading style. What works for one trader may not work for another trader. So it is important to find a style that fits your personality and trading goals. In the next lesson, we will cover trading psychology and how it can improve your trading experience. Thank you for your attention. Kindly subscribe to the channel and sign up on our link to get 100,000 demo accounts for learning and use our promo code Forexvpn to get 100% deposit bonus on your live accounts. We are glad to also tell you that because you asked for it and we did it, guess what? We launched the community that you desire, that you have asked for. Now you can find us on Instagram. You can follow us on Instagram, Top Forex Acad. Also, please visit our website, bit.ly/topforex. You can also follow our fresh fan page on Facebook. You can give a review of how much you have learned and how much Top Forex has impacted you and how much you're doing and where you're going to be in the future thanks to Top Forex Academy. We also want to know more about you. Please follow us, like our page, and also follow our X handle, Top Forex Academy. Thank you very much. We'd like to see you again on this channel. Mind you, we have some self-assessment questions for you that will really help you to improve on identifying your trading style. So if you can get all these questions correctly, please put them in the comment section. We would be selecting some random winners if you get them correctly. Until then, keep it real with Top Forex Academy. We also have a challenge that we are launching soon. In fact, you can quickly book your spot right now. You can also get this information in the description of this video. Would always make sure that we have you in mind. Your interest is our own success story. Your success story is our own interest. We want you to get bigger and bigger with us. We want you to learn and become more profitable with Top Forex Academy. Bye for now.